Okay, good morning, everybody, and welcome to the TTF UK Softwood Conference for 2021. I think we've still got people logging in and joining us, but we did say we'd start at 10, so we're going to kick off about now. As you can see, and as you know, there's a slight change to this year's conference insofar as we are doing the entire event online. It is a bit of a shame. For those of you who can remember all the way back to last year, the Softwood Conference was the last big physical event of the timber industry calendar of 2020 before lockdown. We just got it in about a week before, and we were hoping that this would be a physical event. This year, again, it's always good to see people from all over the network and to get together. However, it is clearly not possible. And indeed, that one subject is likely to come up quite a lot in today's presentations as we look about the impact that this pandemic has had on the softwood market, on supplies to the UK, on the market in the UK, market demand, market dynamics, and so on. So I just wanted to quickly look at a few areas just to run through the agenda today. We're going to have a global overview from Olle Berg at Setra. And Olle did say last year that there could be unforeseen things that come up during the course of the year, and I think he was right. So we'll be looking to see how that compares with his forecast from last year. We then will have a short break and then look at trade flows into the UK over the past year and a look forward to what we think will be happening in the future. We will then look at two of the key suppliers into the UK from Finland and from Latvia, with Matti Mikkola from the director of the Federation of the Finnish Woodworking Industries and Kevin Hayes from AKZ Timber, followed by a Q&A with Olle, Kevin and Matti to really address any questions that our audience may have about supplies in from those places. We're then going to look at UK and Ireland with Keith Ainslie from James Jones and Mike Glennon from Glennon Brothers. There's a lot of change that's been happening, particularly on the Irish sector and the Irish economy, which has raised a lot of questions over this past year, and I'm sure that there'll be more coming through. And then finally, we will be looking at what the construction and housing forecast can bring for the timber sector over the coming year, what has been happening over the past year, what's happening into the future. With all of this, you have a chat and a Q&A function that you can use. You can see at the bottom of your screen. Please do use that during the course of the day and raise any questions you have. We will try and pick them up at the end of each session and answer the questions as best we can. Both Chris, Nick and myself will be collating those questions. If there are several questions on the same topic, we'll just obviously only do it once. But please do use those functions. I would also ask, as everybody should know now for Zoom etiquette, please do keep yourself on mute during the course of this event, just to make it easier for the speakers, make it easier for the audience to hear, in case you've got any background noise, barking dogs or reversing vehicles or whatever. Final point to say, just for everybody to be aware, we are recording this event and we will be making it available along with the presentations, and it should be up then on the TTF website just after the Easter weekend. So that's all from me to kick off this morning. I hope you enjoy today's event. I'm going to hand now straight over to our first speaker to give a global overview in softwood market and the market dynamics, to Olle Berg from Setra Wood. There you go, Olle. I can just see you now. Good morning.
Morning.
Thank you very much. I will just hand straight over to you, and I think your slides are ready to share.
Yes, hello everyone. Pleasure to get this opportunity to talk to you again. I was participating last year, which was also my last trip since then, and I remember then I made also an outlook, and I ended my speech with saying that if this pandemic, however, gets any worse, you can probably use my presentation as toilet paper. And with that said, I all hope that you have had soft paper in your printers during the year then. I will try to go through, and let's see if it's more, I will try to see how the global market is looking, and a little bit, not so much focusing maybe on this year, but maybe how we can see it unfolding on a bit longer term. And I will start with some short macroeconomics. See if we can. Can't get this moving. So sorry. Yes, now it's working. When we look at the GDP numbers for the coming years, we can see that there was a big plunge in 2020, and it was not recovered. And then there's quite a recovery in 2021, and also forecast as 2022. And then for the longer term scenario, there's still a growth, but it becomes more moderate, except in the markets where we see a stronger development and are still on a growth path, as China, Vietnam, Poland, and so on. But the more modest growth of 23 and 25. But the coming years looks fairly good. And one thing that one has to take in mind when looking at the forecast for the coming years is the amount of money that is put into the system. And if we, on this chart here, you can see that the amount of money over a 2-year, 3-year period that was put into the system when we had the financial crisis 2008. And you can also look at the money put into the system only in 2020, which is a tremendous amount of money in comparison. And of course, there are questions regarding how will this money flow impact and how much push does it give to the GDP figures? Will all this money come to use? How much impact does it have on housing start? And what happens when the money is sort of say consumed? And there are many countries that was with quite big budget deficits even prior to this. So will there be a major financial hangover? That is of course a big question. When we look at the consumption development and new housing start, etc., it looks pretty promising, and the main driver is the population growth. And we can see that we are simply getting more people on Earth, at least until 2020. Then it will be leveling off due to the reduction of, most likely due to the reduction of birth rates. And we can also see one key driver for housing start is that there is a quite heavy urbanization, and maybe not the urbanization as such, but the fact is that people are moving and big migrations and so on. When people moving from one place to another, there is a need for housing. So from that kind of platform, it looks pretty positive. And when look at the overall global softwood demand, it's predicted to grow until 2025 with around 48 million cubic meters, and it will pass 400 million mark. And the main driver for this is the recovery of North American market and the continuous growth in China. Then we can also say that there's also a favor of wood. Wood is taking shares in multi-store building. That is alone a driver for wood consumption. And there are also more and more engineered wood products and so on. And drives wood consumption forward, as we can see it the coming years, and also give a platform for maybe more stable demand and stable prices as we go forward. If we then look at a little bit in per market area, start with Europe, and Europe is of course there's different prospect in different countries. That is something that I need to say immediately, but I will try to look at it as an overview. And the prediction is that the European softwood demand will increase with around 10 million cubic meters until 2025. Yeah, I have to do like this and see if I can skip the page. Sorry. And it's driven by some increased demand, but also by substitution of other materials. And we can see this strong drive for increase in wooden housing, which is basically something that is going on in all European countries. And the main driver is the sustainability arguments for building with wood. And we can see that even if we see positive GDP figures for 2021-22, we had the plunge in 2020. The demand is not reaching up, so we don't have any record consumption. That is what I want to say in 2001-2022. Actually, the new housing start was much better prior to the pandemic than it is in 2021-2022, looking at their figures. While the R&M sector is being the main driver in almost all countries in Europe and also in US, and upholding this very good demand for wood products. And as I said, then wood as building material is gaining ground, and we can see that this is a rather major factor. In 2000, the amount of industries that are producing wooden elements and so on are increasing quite well. This is living a little bit its own life. I'm sorry about that. Looking at the housing start then in the EC area, you can see that the plunge in new housing starts in 2020, and then we have an upwards trend in the coming 2 years, but not reaching any record levels in that respect. And there are different prospects in different countries, and this is if you look at 2016, 17, 18, there was quite an, I wouldn't say overheated, but quite a strong market even prior to the pandemic. So for instance, in Sweden, we had a really good building market in 2017, and the downturn started already in 2018, 2019, so prior to the pandemic, so it's not related really to the pandemic. We can also see that the renovation building, the R&M sector in Europe is holding well. And it might be so that these figures that we can see here is on the modest side when it comes to new housing starts and renovation for the coming 2 years. I'm sorry that I have a little bit problem of changing picture here. So now it's working. Moving on to Middle East and North Africa, which is a very important, especially pine market for especially Swedish and Finnish supplier. And here is of course very difficult to obtain any longer term data due to the nature of the markets. But we can say that this area is overall very, very dependent on oil prices, and oil prices has been, even though picking up lately, but if you look previously been really plunging, and many of these countries' economy is driven by the income of oil, and also many of the building activities is done by government, and it's based on, so to say, budget is based on the country budgets are based on the amount of oil income. I don't see that. I think that the long-term outlook for this area is a bit sluggish when it comes to consumption, but it will still be an important market for pine and for the Scandinavian sawmills. And I think but it will still have these elements of financial risk and a high volatility due to political turbulence and so on. The main driver is for this market is the demographics, and there's a tremendous need for housing start in these markets, and that will continue. We have an average age of 42, I think, in general in Europe, and in this country it's 24, 25. So very, very young population. And I think also right now in the coming years, due to the demand of wood is very high in these countries, driven by the fact that the stocks are so low at present, and therefore they are following the European pricing, etc., and so on. But I think as a consuming area, it will not be peaking, and it's very, very dependent on oil, the oil prices. And as a oil, looking ahead, maybe not until 2025, but even if you look longer term, I think oil as a fuel will be reduced in importance as well. US, which is very interesting and has played a big part of 2020 development. And when we look at the underlying demographics in US, and they have an average age of 38 years, and a few years difference here is quite substantial. And they have a very rather favorable demographics compared to Europe, and it's due to the high level of immigration. And the underlying need normally is about 1.8 million new housing starts every year. And you can say that the market has been underbuilt ever since the financial crisis, 2008. In 2008, it crashed down to 450,000. And now they are on the level of, in 2020, they built 1.4. And now when you look at the forecast for this year, they are expected to continue to grow to 1.6, 1.5, 1.6, even maybe 1.7. But there's no prediction that I have seen where you see it's coming back to any levels that was prior to the financial crisis, where they built over 2 million. And in the same time, when this growth is happening in US, the wood consumption is increasing. At the same time, that we have a reduction of supply from Canada, mainly from British Columbia. It's to some extent compensated by fairly big investment in US Southeast, where there's been raw material availability, but it's not one-to-one, so it cannot really compensate the whole volume. And there's been this reduction of supply is due to this bark beetle calamity that has been in Canada for starting 2006-07, prior to the financial crisis, and has been going on for many years. But now these logs are mainly out, so there is a gap in the log supply. And there's all been said, and if you calculate, you can say that and this was also said already 10 years ago, that when reaching a housing start of 1.4 to 1.5 million housing start in US, then Canada cannot supply US market fully anymore, and they need to increase their imports, especially from Europe. And that is what we see happening now. And the forecast until 2025 is that the consumption is expected to increase with around 20 million. So most likely we will see a continued export from US to from Europe. And already this year, we are on the same level as we were in prior to the financial crisis, when US was building 2.1 million houses. And here you can see the forecast for the housing starts. And then if you look at the later part here, the prediction is that they're moving up above 1.5, and maybe this is a bit modest and so on, but it's no way near what it was earlier when they consistently every other year was building over 2 million. So from that point of view, it's not a record boom that we see now in US. It is a better growth pace than earlier, and is moving upwards, but not in the we cannot see that it's overheated. Let's put it that way. The R&M is also driven by this. Since the low building activity and the foreclosure drama and so on that was in US, there's a there's a lot of houses that has been aging, and there's a big need for renovation. And we can also see that the forecast for R&M in which is huge in US, is looking very, very good in the coming 4 or 5 years. And the consumption then of softwood is moving upwards. It's a plummet in 2009 with 49 million, and it's now it's almost doubled until 2025. So getting back to figures that was we haven't seen since early 2000. Asia, another important area, and here we can also see that the consumption of softwood in China is, which is the main, of course, the main interest here, is increasing with around 10 million. And they are having a growth of 5-6%, and the economy is has been going from an investment-driven economy since several years, where there were heavy investments done in China. There were factory builds that was geared for exporting all over the world. And now, at least from a wood point of view, the most interesting is the domestic consumption in China. And China is the second largest softwood market now in the world, besides US, and it's reaching a consumption of 75 million, somewhere around that, until 2025. It's currently around 58. The main dominating player is Russia. They have 60% market share, and they have also the ability to increase their volumes if you look from a raw material standpoint. Canadian imports are going down. They earlier peaked. That was the only market that was available for Canadians at the financial crisis, and they peaked at 6-7 million cubic meter. And now they are going down due to the fact they are turning their production or products to the US market. But Canadians are still there, and I think they are at least somewhat careful to put all eggs in one basket. They will keep some, but it's clearly going down. And China will continue to offer good possibilities for European players, both in red and whitewood. So it's also important to say that China is not only whitewood market, it's predominantly redwood. What we can see now is that there's very low stock, and extremely low stock in China. But what has been exported in quite a number is the bark beetle timber from Central Europe. So in 2019, 7 million cubic meter was exported, and in 2020 was 14. And the first 2 months of this year, it's up 60%. So almost 38% or 40% of the log stock in China is coming from Central Europe bark beetle logs, which is lifted out of Europe then. And if you look at the global share of wood products consumption, it was 20% in early 2000, and it's now risen to 42. And this is something I think this industry has never experienced, when you can see that the market has been created with so fast and so huge consumption. And this is, of course, one main reason for the overall growth that we can see on wood consumption. And here you can see the demand, and it's I would like you to notice that in 2008, when we had the financial crisis, the overall consumption of softwood in China was 16 million, and now it's around 65. So and it's then the growth rate is continuing maybe on a slower pace, but expected to grow another 10 million then until 2025. Japan then, which is an important market as well, especially in Sweden and Finland, but also for many Central Europeans. And here we have a declining housing start, and that is due to this a very unfavorable demographics. The average age in Japan is 47, and the highest among all industrial countries, and they have no immigration. So this is structurally going down. The wood share of the housing starts is around 45%, which is divided then between the main part is traditional post and beam houses, and then they also build in 2x4. And this share is probably remain stable or even taking some relative shares from the overall view from the new housing starts. It is still okay. Japan will be an important market also in the future, but it's very much depending on product. And we don't see here that there are other like CLT factories. There's one being built in Japan and so on, but so far, and we cannot see that it's been flying as in comparison with as it has done in Europe and so on. Then, of course, so consumption-wise, looks pretty good. If we're sitting here as a European sawmiller and looking at the world the coming years, the consumption is increasing, and that is without any absolute record or bubble building bubbles and so on. And when I talked about Europe, for instance, there's still very, very low building figures in South Europe if you compare now compared to earlier years, early 2000. But then you have to put that against production. So what is the development there then? And what we can see is that the Canadian harvest, not lumber, harvesting is declining by 10 million. We make it easy, we can say it's 5 million cubic meters by 2025. So that's clear. There is increase in production, but it's very geographically centered. So you have two areas basically in the world where you can see that there are some availability for growth, and that is US Southeast, where there is mainly pine, and then Far East Russia. But in US Southeast, investments are already ongoing, and a lot of that growth is already put in shape. When you look in Russia, they have increased 20 million the last 15 years. And I would say that all the growth, main growth that is possible is in the Far East. And there, of course, you have issues with the infrastructure and so on. So investment criteria is, of course, harder in that area. And the question is, sooner or later, there will be increased production. Will it happen in a major sense between now and 2025? Some, but maybe not in that range, so it will keep up the demand simply. There's also been what is done short term is coming up is that there are Putin has put out the statement that they will have an export ban on from 1st of January 2022, and this will have a quite big impact. So even though that lumber has taken, there have been more and more lumber export and less log export from China, from Russia to China. But if that is put to an end 2022, will there be production capacity and drying capacity enough? Because these goods not only have to be lumber, it has to be dried lumber. Will it be capacity enough to transfer that immediately? So this is can be a short-term deficit of supply from Russia to China. Has also certain implication in Finland and Baltics as well. The other thing that is ongoing is this bark beetle calamity in Central Europe. And as I will show you that in a second, but it will peak during 2021 and 2022. And according to the statistics that I've seen, it's almost in 2021, almost 100% of the logs until the coming years will be damaged. And the harvesting level is about 100 million, which is quite high. After that, harvesting will decline, and as well as the proportion of damaged logs. This is the Canadian production. You can see that Western Canada, British Columbia is predicted a downturn of 12%, and then you can see a small pickup in Eastern Canada with 3%. But clearly, production here is structurally going down. We don't think that due to this reason that if you look in Europe, there's not much room for any growth in Sweden, Finland, and Central Europe, especially after the bark beetle logs availability is disappearing. And we don't forecast any major growth in this area until 2025. This is the situation if you look at the Central European bark beetle. And you can see that in 2021, the harvesting is almost 120 million, and then it's going down. And the question is, of course, and peaking also the bark beetle is almost everything is almost damaged. Now this is will drop 2022, and then the question is, what will the harvesting level be, and what will the log availability be when these bark beetle logs is gradually produced and delivered? And a lot of these logs now then, quite a bit is then exported as logs out of these countries. But here we can most likely see a gap in the raw material in the log supply. The availability will be less for coming years than it's been prior to this calamity. Russia, yes, we foresee that Russia will increase in the Far East, not so much in European Russia. And this is harvesting now, so if you divide this 50 million by half, you get the number of lumber that is put out. But there are, in Asian Russia, there are tremendous a lot of issues. What to do with there's long transport. What do you do with all the chips? There are not that many pulp industries and so on that is consuming the byproducts and so on. But still, the drive from the China and investment money coming into this area in China will still attract and build up further capacity in Far East. That is most likely clear. If I do some conclusion, then the sustainable increase, you can see that in Russia and in US Southeast, but very, very geographically limited, so to say. We will see a downturn in Canadian production, no major increase, and that is due to raw material constraints you see in Finland and Sweden. We will see high production and full capacity utilization already. We see that already in Central Europe for the coming years, and but will decline 2023 and forward. And the overall conclusion is that production increase in this scenario is not exceeding the production consumption increase. But we should not exaggerate even that the shortage of wood and the situation we see now, we should not over-exaggerate that and think that this is a situation now we will have for until 2025. That is not really my message, but the demand looks a little bit higher than the output over the coming years. And when you look at the balance, and this is now from a European perspective, and this is the total production in Europe this is actually 2025. I'm sorry, this is wrong. And then we forecast the consumption, which is the blue bar on the right side, 96 million in Europe, and the rest then has to be exported. And when you look at the numbers and you try to make some kind of sensible prediction, you can see that the right-hand bar is over exceeding is higher than the left-hand bar, which means that the supply is looking over this period that the demand is exceeding the supply. And one can say that it's 140 million and it's 146 million. It's not so much, but actually, when we look historically at these demand and supply balances, it's very little. It's not many millions that is needed in order to turn the ship from one side to another when it comes to availability and pricing and so on. And this is rather clear on the supply after all, as it looks in this scenario. And the main driver, as I said before, is basically three. It's the development in China, development in US, and the development of wood as a product in construction. Sorry, was too quick. So if I try to conclude this a little bit then, so positive development in US and China. We have a structural production decrease in Canada. We see that the European production remain at high level, but very limited possibility to increase. The bark beetle Central Europe will peak in 2021, 2022. So we should remember, even with this demand, and we already are in full production with these bark beetle logs in Central Europe, and also in full production when it comes to harvesting, and it's not flooding the market. The market can absorb this. We had the Russian log export ban coming in 2022, could be also boosting this deficit a little bit especially from a Chinese perspective. So supply balance overall from a European sawmill or a Swedish and Finnish sawmill perspective is looking rather favorable until 2025, in combination then with the big possibility that this increase in wooden construction, especially multi-story building, is driving, and where we can see major investments being done as well. It sounds good, but then of course you get the question, when we have these high price increases and so on, are we now facing a 2008 scenario regarding softwood prices goes up very quick and then it's just plunging downwards? Well, who knows? But at least if we try to compare what happened 2000, how was the situation in 07, 08 compared to now, then there at least are differences. I mean, we had, if you look at in 2007, 2008, we had a financial crisis, and that was driven by a huge speculative bubble, especially with subprime loans, but also huge speculative building. The housing start in Europe was 2.1 million, and we are now talking on levels of 1.6, 1.7. And in Spain, for instance, they had an underlying need of 300 houses a year, and they built 800 houses for several years in a row, and so on. But and you compare today, we have no financial crisis yet, but we have a pandemic. That's a difference. But the pandemic so far has actually been more of a driver of wood consumption than, surprisingly enough. As I said, absolute record start in 2007 in housing start. US was on 2.1 million. They are now 1.5. Europe was building like crazy, etc. and so on. And if you look at the housing start now, we are still trailing. We are no way near these figures as they were in 2007, 2008. Chinese market, they were consuming 16 million at this point. And now they are consuming sorry, 65 million, it should say here, consumption. So you have a completely new a market that has increased with 50 million cubic meters. South Europe in 2007, 2008 was still significant consumer of softwood, and now they've been out and they are still out. In 2008 and 2007, 2008, it was also so that there was very, very high availability of raw material. You had the problem in Canada, you had bark beetle logs that need to be harvested and produced. You had a prior storm in Sweden that put 75 million cubic meter logs on the ground. And then beginning 2007, you had a big storm in Central Europe, Kuril, which was around 20 million cubic meter, and you had low capacity utilization in Russia, so they could increase when the prices was coming up. And also, as a factor, the CLT capacity at this point in Europe was 75,000 cubic meters. If you compare then to this now, then Chinese market, as I said, if you compare raw material, there is no more bark beetle logs in Canada. There's no possibility of further growth in Sweden and Finland. We have a lot of bark beetle logs. That's a difference, and they are higher than this Kuril stuff, but they are reaching its peak. And the question is what level harvesting is coming as a result. And Russia has increased with 10 million, and this 10 million is so they are way higher production in Russia already now, and it's absorbed by the market. And the CLT capacity, which you can say is a new segment then for wood consumption, is about 2 million in Europe. And the production is almost equal to consumption at the moment. So at least my message is that, yes, we don't know what prices go up, it evidently will come down. But if you look at the fundamentals and you ask yourself, is this now like 2008? No, not yet. Or let's put it this way. If it crashes, it has to crash for other reasons. Well, a financial crisis could, of course, happen again, but otherwise it looks different now. The market dynamic looks different now than in 2007 and 8, which is important to understand. So when looking at these what can go wrong issues, you have to look at different things then. And so the comparison with 2007-8 is not really maybe the best one to do. Well, I start with say that in the final end, this is just it's a scenario, it's a thinking, it's how we view the market at present, but who knows? I'm not going to end my presentation as I did last year, because I think the pandemic and its effects are more under control now and more visible than they were a year ago. And I stop there. Thank you so much for listening.
Thank you very much, Olle. That was excellent. I think we've got a few questions to raise here. If I can just get my screen working. No, anyway. There were a few excellent points in there, and questions coming through from a number of different sources. First of all, though, I just wanted to pick your brains on a couple of points, particularly ones that came up in the last couple of slides. You said there over the next few years, demand will be higher than production. So we can see overall what that will mean for availability and price and everything else. But within that, there are a couple of sort of other little quirks within that overall picture, and particularly about this increase in CLT production. Have you looked in Sweden or across Europe about what effect that might have on other areas of the softwood market, where those those other grades of timber will be used up for CLT production, and what sort of bubbles or kinks that might cause in supply chains?
Just so I understand you right, you're meaning that so the raw material used for going into the CLT is taken from somewhere else?
Yes.
Yeah, of course it is so. And we can see that it's not so that all of this is taken from one area and put into the other. But we can see that a lot of the traditional, now I'm talking mainly from a Swedish perspective, and we can see that the effect right now, it's going, taking away from any traditional sawn goods sizes and dimension and quality is going to a very traditional market like France, like Holland, Belgium, like Sweden and UK and so on. So surely, but it's not sort of say that this is the segment where it's taken from. On the other hand, it's also for many sawmills, even those you don't have invested in you don't have any investments or in CLT, it provides a new business area for many as well. So it is quite an opportunity.
Yeah, okay. I'm just going to look at a couple of other questions. There were just a couple more coming in, if I've got them coming up. First of all, I'm just going to ask on the US market influence. There's a question coming in saying that if Europe keeps feeding this US market, how long before they impose tariffs, just as they did on Canada? Or do you think that is likely?
No, I don't think that's likely, because the dynamics is different, because Canada has tariffs because there's enormous amount of volume coming from one country.
Yeah.
We are peanuts, even if we are from, and it's coming from so many different countries in Europe. So each country, if everything, it needs to, no, it's not, I don't think so.
It's not going to happen.
No,
okay.
No.
Okay. Then just one more question on this, and then we're going to take a very short break so people can refresh their drinks. But there's one here saying, do you see any other uses of wood fibre challenging the sawn timber market longer term, other than CLT or engineered wood products, particularly in developments around pulp or growing production of biofuels and the other chemical stocks in the bioeconomy? We've seen a lot of investment going in there, and it is taking fibre into those units.
This is a difficult question. Actually, also asked this question later on when Mr. Mikkola is on, because he's quite knowledgeable in this area. But I would say like this, without knowing specifically, or cannot say that specifically this area, that area, but of course it's all when raw material get constrained, and there are various also new segments, energy, etc., and so on coming up, and also when the packaging side is growing, there will be higher competition on raw material in general. So and paying ability will be important. Yeah. Raw material will not be cheaper. That is pretty clear.
Absolutely. There's certainly an increase in packaging material coming through every front door of every house at the moment, I think, while the pandemic is on. Olle, thank you. I'm going to leave it there for now, just to try and keep us on time. Thank you very much for that. Please do stick around to join us for the panel discussion shortly. We're going to take to look at trade flows into the UK. Whilst we've seen the global picture, what does that mean for flows into the UK? And I'd like to introduce now Nick Moore, the TTF Statistician General and a Managing Director of Timber Trends, to give us a picture of what's been happening to the UK flows of trade. Nick, over to you.
Okay, thanks, David. Hello, everybody. Whatever continent you're on, or whatever time zone you're in, good morning, or good afternoon, or good evening. I'm going to review the development of softwood imports over the next 10-15 minutes or so, and attempt to make some sort of sense of what has been happening, certainly in the UK. I hope you can see the picture on your screen at the moment. Do not adjust your settings, it is normal. And in terms of normality, it is what the trade flows were, traditional pattern of trade in the 3 years between 2014 and 2017, before our worlds began to be turned upside down. As you can see, the normal pattern of trade before the last couple of 3 years showed that Q2 was usually a little bit higher, and as the year developed, then volumes were a little bit lower towards the end of the year. All of this changed in 2018 with the spectre of Brexit looming, and preparations ahead of Brexit created a spike in volumes of 15%, a significant difference between what was normally expected as a volume for that particular time of the year. And the Brexit effect carried over to 2019 as well. And indeed, in the first quarter of that year, 2019, we can see that there was a 17% difference between what was expected to be normal. However, what we can see, if the chart on the right, this Brexit effect in that particular period of time towards the end of 2018, a missed deadline, and the next missed deadline in 2019 really disrupted what was the normal course of events in terms of softwood imports. Okay, the distortion of trade created by Brexit was pretty small beer, however, compared to what was to come. 2020, little more needs to be said about what has been happening, except that the extent of the downturn in the spring of last year, 2020, we saw a 24% reduction in Q2 of import volume. This was pretty drastic, obviously. GDP, I think, went down by 19%, but there were other industries with far greater losses of activity than our own softwood import markets. I think, to the surprise of many, not only did volumes recover quickly, but continued to grow, fueled by the construction sector that remained open throughout the periods, and indeed the burgeoning DIY and home improvement trend has created a high demand for our products. This was the difference between the previous normal pattern of trade, 2014, 2017, to what happened at the end of last year. So you can see that the quantitative effects are shown on the right-hand side there of the distortion in trade that has been happening over the past 3 years, a couple of years of Brexit distortion, and obviously what's happened in 2020 with the pandemic. Let's throw another large number at you. Just how much more volume was imported in the second half of 2019? Well, the answer, as you can see, is over 1 million cubic meters more in the second half of 2019. Admittedly, business was relatively slack towards the end of 2019, which makes the comparisons a little sharper, but the turnaround in volume in Q4 of 2020 really is truly remarkable. For the record, Q4 2020 delivered in real terms over 2 million cubic meters more than any other Q4 in this century. And although I haven't delved back into the history, possibly the last century as well, at least for a good part of the 20th century. So a quite remarkable turnaround of fortune. So from where did all this volume come in the second half of 2020? The answer is virtually everywhere. Let's look at some of the highlights of this volume increase in the second half of 2020. And This is the plain goods over 300,000 cubic meters more in the second half. And as would be expected, the usual suspects have improved the volumes over this period. Sweden, with a share of exports of over 40%, has led the way and supplying 80,000 cubic meters more in the second half. And the growth has been enjoyed by most of the leading supplying countries, however. I'd just like to point out that there is some doubt about some of the Russian numbers. The total number we are fairly confident with, but the composition of that total is under review. Fortunately, the leading expert on Russia is on the case and is looking at this for us, so we may have a little closer view of that in a short while. Okay, so that's plain goods. With sawn goods, over 700,000 cubic meters more in the second half, significant volumes with a very similar pattern of supply as you'd expect. And the plain pine numbers, 80,000 cubic meters more, with, again, Sweden certainly the big winner in terms of supplying the market. With sawn pine, then 300,000 cubic meters more in the second half, again with a very similar pattern of trade. And then plain spruce, over 320,000 cubic meters more, with a slightly different picture emerging in the supply, with Germany and Latvia together claiming over 1/2 of the total increase in the volume in the second half of 2020. And sawn spruce, a similar sort of volume increase in the second half. And as we can see, the leading countries all supplying more into the market. As a matter of interest, the sawn spruce picture for the number there you see of 68,000 cubic meters more from the other leading suppliers to the UK. Within that total, are significant increase in volumes from Austria, from Lithuania, but also from the Czech Republic. Finally, other sawn, as a highlight to give you a roundup of the major features of what's been happening over the second half of 2020. Other sawn mixed species with Latvia and Germany and Ireland leading the charge with this particular group of products. So the overall result of this remarkable recovery in the second half of 2020, what was the final outturn for the year? Well, an actual increase of 3%, which back in the dark depths of April, when we were all in lockdown, not just in the UK, but most of Europe as well, the prospects of any growth in 2020 were remote, to say the least. So we developed from a position in the spring of 2020, volumes 25% down, and we have lived through the second half of 2020 with an absolutely unprecedented change of fortune in terms of import volume coming into the UK. A quick look at softwood production, UK softwood production, and here there's growth as well, predicted. I say predicted. This is an estimate for 2020, simply because the Forest Research won't be releasing their figures until the autumn, the final figures for 2020. So this is an estimate, and it is an estimate which I'm very grateful to Keith Ainslie of James Jones to have supplied. He has a far closer view of what's going on in that particular part of the market. And I know Keith's coming on later, will probably give you an even greater insight into what's happening. But what it means is that I've taken Keith's figure more or less, maybe a little bit less. That figure of 3.5 million cubic meters production in the UK is considerably more than the original forecast from Forest Research. But of course, the Forest Research forecast was made way back when things were certainly a lot more gloomy. So let's have a look at what's happened to consumption Again, because it's an estimate of UK softwood production, then it's an estimate of consumption. But we feel that based on these numbers, that the outturn completely for 2020 will show a 3% uplift in UK consumption of softwood. That was 2020. And so let's have a quick look at 2021. In the current circumstances, I think anyone who wants to make a forecast for 2021 has got to be slightly mad. And sure enough, as you can see from this little chap on your screen, I am going to make an attempt to put some sort of numbers on 2021. Softwood imports, the 4% growth that you see there would take volume to between 6.8 to 6.9 million cubic meters. The 4% comes from an original estimate from the National Softwood Division's committee's forecast. It's certainly subject to debate and may even be considerably higher. I know that without stealing Keith's thunder a little bit later, that UK softwood production is forecast to increase just a little bit more than we have seen, as we see on this forecast here for softwood imports. And if imports do grow a little bit further at the same rate as softwood production, then in 2021, the chances are that the 7 million cubic meters mark might be breached. And if it is, it'll be the first time since 2007 that volumes of that scale would have been witnessed. So what is the justification for this optimism? Well, let's have a little look at some of the factors involved. Housing starts in the UK in 2020. This is a forecast. As you can see, it's a reduction, quite a significant reduction, down to 159,000 starts. Those numbers are indexed, by the way, in order to show the comparison between softwood imports and housing starts and the relationship between the two. So I've input the real numbers, the actual numbers on the right-hand side there. You can see the 2020 softwood import volume of 6.58 million. The 159,000 UK housing starts is an estimate, of course, because the stats from Scotland, Wales, and less so, but from Northern Ireland as well, for 2020 are not yet produced by the other nations. The English, the housing starts in England are available, have been finalised. And as England represents about 80% of the total housing, new housing market, then we can get a pretty good view of what housing starts are going to be like when the final figures are provided. And 159,000 is somewhat higher than the original scenarios that were put forward. So 2021, a return to the sort of pre-COVID levels. With over 200,000 starts is a figure which is based on the Construction Products Association's scenarios, and I'm sure that Noble will be saying more about that later. But what you can see is a return to the sort of pre-COVID levels, and that helping to fuel the growth naturally of softwood imports. The big caveat, of course, is beating the virus, and I think this has been factored in with these numbers here. The other big market for softwood imports is the repair, maintenance, and improvement housing market, and a similar sort of situation here, a bounce back in 2021. So let's have a look at the summary of the key drivers, and I think you can see from these key drivers most of them are positive. As I mentioned, the forecast numbers there, housing starts, RMI housing activity, are derived from the Construction Products Association's forecasts. The GDP numbers and manufacturing output are economic forecasts from a group of reputable forecasting organizations. The possibility of further DIY garden, the changes in society that are going on, home office situations, is going to be a positive influence on softwood imports, possibly negative imports. As you can see there, log supply difficulties, tightness of log supply, also with increased pricing because of what's happening with the pandemic. Maybe provision of bad debts needs to be looked at by a number of organizations. And of course, then there's the usual situation with exchange rates. How is that going to affect price levels and supply situations? All these factors, I think, will come to bear upon our market in 2021. And I'm pretty sure that Nobel is going to supply greater insights into some of these numbers later on this morning. Okay, so there are potentially positive and negative influences that could impact the market in 2021. So what are the prospects of a return to the sort of trade patterns that we enjoyed at the earlier part of the last decade? I think that the answer in many ways is that this sort of normality is not going to happen in 2021. We're still a distance away from that type of situation. But I think that the problems that was had with Brexit and COVID are hopefully going to be behind us. And there is despite the uncertainty that still surrounds us, there is a high degree of optimism, if you like, or anticipation that we've turned the corner, and let's hope that that's the situation. The 2021 trade patterns are certainly going to be higher than what we've experienced in the recent past, barring any further major problems or catastrophes. So I would like to thank you for listening to this presentation, and hope that it has placed some form of context in what's been happening over the last 3 years and this glimpse into this coming year. So thank you again for listening.
Thank you very much, Nick. That was excellent. Some fantastic insight and stats there. Also the most polite phrase I've heard about our NSD forecast, where you said they may be subject to some debate, which with our highly accurate and scientific forecasting model. Nick, I'm going to, given time, I'm going to take questions at the next break. So please do stick with us if... Well,
good morning again, everybody. Just wanted to say a couple of things. First, apologies that you're listening to a Brit talking on behalf of the Latvians. The Latvians have a very old phrase that says initiative is punishable, but I think we need to see a bit more initiative from the Latvians, and I'd like to see a Latvian again up here next year. And the other thing I just wanted to say before I go into a presentation is sometime in the timber trade, we can be a gloomy bunch. And at the moment, we're having a bit of a good time. Prices are rising, markets are busy, we are all employed, we have jobs. And I just think we should, any kind of, analysis and problems that we highlight, we should just put it into context of people in other industries and particularly hospitality and the travel industries, but perhaps not having such a good time. So let's perhaps, what Olle Berg was saying earlier about not being too enthusiastic, etc., but let's just keep it in context. So moving forward, the three areas I really wanted to talk to you about in Latvia, the forest situation, the production, logistics, and then we move on to the markets. In the forest, you've heard this from me before. It's very, very simple: 50-50 state and private ownership. And the private ownership is a free market economy. And this is a very strong difference between the state and the private. So the state have an obligation to supply logs. They have an obligation to keep the industry going and everything. The private sector, 50% of Latvia, really it's a commercial decision whether they fell their logs or not. In the state forests, there was, they have a system of cutting licenses, etc. And there was a theory in 2019 that they overcooked it. And so in 2020, they reduced the felling volumes. And again, in 2021, the felling volumes are down, probably about 15 to 20% down from the state forest side. But it's expected that the private sector will compensate for that. And the overall volume will be something like 5 to 10% down this year. The reason the private sector is a bit of a problem at the moment is that they are reluctant fellers of their trees. The pulp and paper markets around the world are not brilliant. The big Scandinavian pulp producers are the biggest customers for Latvia. And they, of course, are using their own pulp logs before importing from the Baltics. And so you've got a situation where if you're a private forest owner and you really don't want to, be sitting looking at a pile of pulp logs, you'd probably prefer to sit and look at your trees. And unless the price of the saw logs, the middle part of the log, unless that price was so good that you'll fell the whole tree and you'd do something else with your pulp logs, perhaps put them into heating pellets or something like that, although that market itself hasn't been brilliant. So private sector forest owners have been reluctant to sell their logs. And what's then happening is the demand for logs is incessant. All of the big players and the small players in Latvia, everyone's after logs. And so the private sector are looking at very, very serious price increases. There's almost a weekly upward spiral going on. There's this system in Latvia as well that is a bit antiquated. It's all online now, but there used to be almost the truck full of logs doing the rounds of the sawmills, and each sawmill would have a board outside saying what they're prepared to pay. It's gone on a bit since then, but if you don't pay the money, you don't get the logs. And I think that's very, very much the case in the private sector. There's the result of all this is much higher log imports into Latvia, and I'll move across to this chart here, where you can see that the blue columns are the this is all indexed, by the way, but they're the basically the sawmill productions from the larger sawmills. The orange is the export of saw material, and the grey is the saw log import, net import. And you can see that everything's pretty static since 2017, 2018. Slightly more log imports in 2019, but look at the figure for 2020. That's a real rocket of import growth. And interestingly enough, when you look back at another picture here of the larger sawmills production index, and you can see it's incredibly static. And there's not a lot of change, a lot of movement. There's investment in Latvia in terms of better equiment, more efficiency, but not more capacity. And you can see that this situation is set to carry on. And so in terms of that static sawmilling capacity. To keep that going, logs have been coming in from very strange places. Everyone thinks that the logs from the Baltics or into the Baltics are from Russia and from Belarus, Ukraine, places like that. But Belarus, Russia have banned log exports. Olle touched on it earlier. There's quite a lot of sawn timber coming in from those places now. But in terms of log exports, log imports into the Baltics, surprisingly, almost 1 million cubic meters of logs came into Latvia from Lithuania, which is probably next door neighbor, and that's to be expected. But then about 200,000 cubic meters of logs came from Norway. There are imports into Latvia coming from interesting places. But moving on, looking at production, and I'm very pleased to say that there was no great impact from COVID in Latvia. The government had the first wave absolutely nailed down under very, very tight control, and they let it go a little bit in the second wave, which is still underway now. But they're on the recovering side of it. So yes, it's still a problem in Latvia. They don't have vaccinations as well as we do, etc., but things are improving. And we've had regular incidences in sawmills and in offices and that kind of thing, but so far no great production outages or anything like that. I've already spoken about the sawmilling capacity. I'll leave that there. In terms of higher costs of production in Latvia, I've spoken about the extra costs of logs, which is inevitable. To get good workers, especially where sawmills are based mainly in the countryside, you have to pay good money. Those costs are not going down. Energy costs, we all know about that. But one of the biggest costs in Latvia, especially for some of the smaller mills, is the cost of compliance today. And in terms of FSC, PEFC certification generally, a lot of the smaller sawmills who previously have had certification are doing away with that because they can sell their productions 10 times over. And the customers are not too bothered about the certification. It's more about having wood, which is a bit sad, really. For the bigger mills in Latvia, like ourselves, that's of course a different story. And so you have this kind of situation where certification in Latvia, because of the increased costs and the compliance issues, is probably for the smaller mills is not so prevalent. I've written there increased timber imports. Because of this log situation, it has given rise to a growing remanufacturing industry in Latvia. And you'll find that timber is actually coming in from Russia, from Belarus, from Estonia, from Lithuania, from Sweden and Finland to be remanufactured. There was one instance recently where I was aware of one competitor in Latvia who's a remanufacturer buying 3 meter long boards from Sweden, bringing them down to Latvia and producing BS 5534 graded battens. Now, everybody knows that in the normal world, nobody buys 3 meter battens. Roofers will have any length that you can give them as long as it's 4.8. So here we go, 3 meter battens, and they've already been sold to the UK because there aren't enough BS 5534 battens to go around. So people have got to change their ways. And this is how the remanufacturing industry in Latvia is adapting, is changing and developing. As far as logistics are concerned, there are some issues with vessels. We had some quite serious ice issues in January and February out of the Baltic Gulf. And a lot of the small tonnage who don't have ice class, they headed down to the Mediterranean for richer pickings and easier money, and they haven't come back. So only now, we've had vessel delays and vessels, disappearing on us and all that kind of thing. And it's not, it's a general problem in the Baltics, I think, for liners and for charters, the both. And so that, and then of course there are also issues with container shipments because there's more containers going from the Baltics now. For example, there are higher volumes going to the States. that is mainly shipped via container. If you're shipping out of Riga, you have a choice of shipping to Sweden and then transshipping on one of the enormous 45,000 cubic meter vessels, or you can ship directly to the States in containers. But the cost of containers and the availability of containers has gone up tremendously. So there are some logistics issues, and also there is problems in the ports in Riga at the moment, just with congestion. I've already mentioned a buildup of pulp logs, and there are piles of pulp logs waiting for homes to go to in the ports, taking up valuable space. There's also vessels tend to be like London buses. You can wait ages for one, and then they all turn up at once. And so there is an issue with ports congestion, but it is sorting itself out. Right. If we look at the import figures, and Nick has touched on this, you can see here the graph of imports from Latvia to the UK over the years from 1997 right up to 2020. And you can look at the heydays of almost 2 million cubic meters, where most of it was unseasoned. It was all about quantity, not quality necessarily. Of course, as the industry has developed, it's dropped down. In 2008, 2009, we had the recession all over the place, and you can see that the volumes have grown since then. And the little bit on the end, the red bit, is the tick up that we experienced at the back end of 2020, because as Nick has already said, all of the action happened in the second half of 2020, and against a UK import figure that we've just discussed of plus 3% overall, you can see on that Latvian figure that 1.289, it beat all expectations. And is 14% up on 2019, which is quite remarkable, really, considering all of the issues that we've encountered. So moving on to the market situation generally, we've talked about the supply being very limited, log supply is tight and expensive, and the sawmill capacity is static. Sometimes it amazes me how the volumes still keep coming from Latvia, but they do. Worldwide demand is incredibly strong. All markets are being led by the USA, and as far as we can see, the UK is continuing or set to continue strong. And in one of our NSD meetings recently, one of my colleagues mentioned that India is the new China, and we haven't really touched on India yet, but I think that's going to be a very interesting development. And I understand that timber frame construction has just been approved over there for new houses, so that is going to develop demand tremendously, I think. Another thing to mention is the increased domestic demand in the Baltics, where the Baltic industry is developing in things like CLT, and particularly in kit housing. And Finland has been very, very strong on this, but you can now, in Estonia and Latvia, there are companies doing these very, very swish housing kits and demanding a lot of wood. Market loyalty, rapid price inflation, I've already mentioned that. I think everybody is probably aware of the fact that the UK structural timber, the price has doubled in 18 months, but it's still some 20-25% behind what sawmills will get as a net mill return from the USA market. So that's just something to take into account, that inflation, I think, is here to stay for a while yet. And I've written market loyalty at a price, and I think we all have to be realistic in the UK that yes, Latvia will continue to support their loyal customers in the UK. You've seen the graph just now. Latvia, from our own sales, is something like 60-65% of our production. But the UK will have to carry on paying those price increases. Sometimes it's hard to take, but just to keep pace with other markets. But the UK market commitment is certainly still there. The products in the UK, they suit the Latvian sawmills. The Latvians are geared up for items like structural timber, roofing battens, decking, this kind of thing, the bread and butter of the UK market. Prognosis, what's going to happen for the future? What will change? Will one market, will the USA collapse? Will new sources come on stream? We've already heard a little bit about that. Will the bubble burst? There's no sign of this, of any of this at the moment. I started off by talking about the fact that we're enjoying happy days, and I think the happy days are still to come for a while yet. So thank you for listening. I also
the picture there. As I said, the COVID didn't have much of an impact on the production in Finland. I mean, you can see here that in April, May, some decrease in production, but that's all about it. The biggest impact for last year's production came from the strike, and that reduced the production during the first quarter quite radically, and we were not able to kind of pick it up during the following quarters. This picture also shows you that there's not much variation between the years. So as Olle said earlier, Finland and Sweden are not able to increase radically their productions. It's pretty much true, even though the growth in our forests is on a record level. I mean, our forests are growing 110 million cubic meters on a yearly basis, and the sawmilling industry is using 30 millions out of it. Next page, please. Good. Okay. Inventories in Finland last year, we ended up in December 10% below the end of 2019. And actually in December, the inventories were already on a quite normal level, but 10% less. If we combine the inventories, Finland and Sweden together, you can see that the inventories were 23% less compared to 2019 end of the year situation. So yes, there was shortage already in place when entering this year. If you put the next slide, what about then the exports 2020? All in all, the exports from Finland reduced by 8%, sawn, planed and glued. The UK, the exports to UK, which are almost 10% of our total exports, they ended up in 780,000 cubic meters, which was 6% less than 2019. UK was not the biggest sufferer regarding Finnish volumes. Egypt went down 23%, China 22%, and Japan 13%. And some increase to certain areas like Saudi Arabia, Israel, mostly because of the downturn of the Chinese market. If you look at the US figure, we increased the exports to US by 135%. But keep in mind, this is only 1% of our total exports. So the figure to US grew radically, but the total volume is still below 100,000 cubic meters. US is a difficult market for Finnish producers because of the logistic costs. So the prices in US, they have to be really, really high before the volumes start going towards the US market. But anyway, the total export market went down, total exports went down by 8%. Yes, now the next one. What about the Finnish market? The consumption in Finland went up by 8%. Why? Mainly because of two reasons. COVID had an impact on the domestic market, as in most of the markets. DIY and home improvement went up, and they are booming, and they will continue booming also this year. You've heard about the typical Finnish summer cottages. Because of the remote work, the popularity of summer homes has grown quite radically, both in new build and renovation. And people are more and more looking for possibilities to have not only a summer house, but the second home in outside the larger cities. And this trend seems to continue also, which means also increased use of wood in the summer house cottages. The other thing is that the national wood construction trend is very positive. the Finnish government has set a target of 45% share of wood in construction in public buildings by 2025. This means that we should actually more than double the share of wood construction in public buildings within the next 4 years. Then the last page, please. I would like to remind what also Olle said, that the industrial wood construction will pave the way to further increase of wood in construction all in all. I have the figure 30% here glued on the picture. That's the figure, how much we can reduce CO2 emissions by switching from concrete to wood in multi-store buildings. But at the same time, we can't only rely on the climate impact of wood products. We also have to be able to increase the productivity of construction. And there we have a lot of efforts ongoing here in Finland and also in other markets. Industrial wood construction increases only if we are able to radically increase the productivity development of wood construction. And this means then that both industry and trade, we all need to adjust ourselves to the rapidly changing business environment. How the trade can support and serve the wood construction market remains then to be seen. Thank you.
Thank you very much, Matti, and sorry about the technical hiccups we had there in the at the start of the presentation, but thank you. There's some excellent points in there. So I'm going to open up now for questions to for Matti, for Kevin, and for Olle and Nick. Before we do, I just wanted to pick up on that very last point that Matti made about industrial wood construction. And we've sent an email out from TTF to all members this morning. The government in the UK, or the Environmental Audit Committee in the UK, is asking for input and feedback for a consultation about how we can decarbonise construction. And I see this as an excellent opportunity for the timber industry as a whole, the timber sector, to give feedback. We've sent it out as a survey that we're conducting through the newly merged entity of TTF and Trada. We can then collate all of the answers and give an official response. So the email would have gone out whilst this event is running. Do have a look in your inbox afterwards, and please do fill that in so that we can start to collect and collate all of those results. However, I'm going to come back to the questions that we've got coming through from others. And I'm going to start actually with the question that I'd asked to Olle earlier, and really to say what other pressures we've seen about the demand forecast over the next 5 years. We've also seen about production forecasts. Can I just start by asking everybody about the other markets which are consuming wood fibre and the impact that may have on the availability of timber? I'm talking here about the sort of bioeconomy markets, the biochemistry, the various fuel markets, and so on. Is that a big factor, say, starting Matti, in Finland? Is that taking material away, or is that not really affecting the availability of fibre for timber?
Well, as Olle said, there will be more demand for wood, and that will affect all the different segments. However, for example, in Finland, the woodworking or the mechanical woodworking industry pays 2/3 of the pay bill of the forest owner. So if we would then say that the chemical wood industry would start consuming the logs we today use for sawmilling or plywood production, they would need to pay double the price they pay today for the pulp logs. And they are not able to do that. They are not able to shift the raw material prices into their products with those kind of a price levels. So that you still need the mechanical woodworking industry to be able to pay for the forest owners.
Okay, no, that's a good point. Thank you very much. We get the question quite often from journalists and others about the growth in the sort of the timber chemistry markets, and that's a very good and succinct answer. So thank you for that, Matti. I'm going to just pick up on a couple of the questions that are coming through. This one's directed to Matti again, but I think it's open to others. Do you expect the Russian log export ban to influence raw material supplies to Finnish sawmills that will in turn influence the sales from those sawmills to the UK? I think that actually could be answered from a Finnish perspective and possibly from a Latvian as well. So, Matti, we'll start with you as it was addressed to you.
Some 20 years ago, we in Finland, we were dependent on the Russian logs. We discovered that things can happen in Russia overnight, and we didn't want to be dependent on the Russian logs since. So today we are pretty okay with the Finnish raw material base. We are not dependent on the Russian logs. If the Russian logs will be banned, it will have a slight impact on the Finnish producers, but not too big one.
Okay. And Kevin, from a Latvian perspective, does that affect supply coming in and supply coming out?
Yeah, we're missing Russian logs, but getting used to the idea, because although the ban might not be officially in place until 2022, both from Russia and from Belarus, as I mentioned earlier, that it's been effectively a ban for the last year, 18 months, something like that, perhaps even a bit longer. We're suffering with things. We're not getting so many 6 meters through, which are very popular in the UK. And there's kind of infrastructure that's set up, for logs. We've got a railhead into our sawmill that is just gathering dust at the moment because it's there's no Russian logs coming through. So, but I think there is in the Baltics generally, particularly in Latvia, there's more Russian timber coming through. So sawmills are sending boards, they're sending 50 mil, 47 mil, that kind of thing, rather than the actual logs themselves. So there's some compensation there. Okay. I'm just going to pick up, the questions may jump around a bit. I'll try and keep them themed, but it may not be possible. One thing was about price and supply. We've seen from Olle's presentation that demand is likely to outstrip supply over the next few years. We've had several questions about the drivers of the recent massive price increases over the past 12 months. I realise that this is not a forum for crystal ball gazing or for naming specific prices, but do you see that trend continuing over the next, say, 12 months, if we just look over that period? It would appear from Olle's presentation that this seems an inevitability.
If I would try to answer, I mean, I would believe so, but it's of course, if one should notice that this drive and deficit of material, as we see, and the situation we have on wood prices going quite substantial up and so on, it's not related to wood explicitly. This is happening on many base materials at the moment. And it's also so, I mean, I think the fundamental is that the prices will keep firm or further climb upwards. Then, of course, when you have so sharp increases as we have now, of course, there can also be a rebound. And if I look, let's put it this way, if I make a comparison to US market at the moment, you have to pay, the prices are like $500 net per cubic meter for a 2x4 or something like that. And at that point, no one is buying any stock. They are buying what they need. But then the prices, when the prices go down, they start buying. But the threshold for if the prices go down to 425 or whatever, then they start buying. But if you compare that to a number of years ago, that bottom line was way lower. So even if there would be, I think that prices will probably continue to go back. There might be a rebound just for the mere fact that the price has been so heavily increased. But then I can't see really right now that they would crash or there's a wall of wood coming from somewhere or something like that. Not in the short-term perspective.
Okay. Okay. Just relating to that, I'm just going to see pick up on a couple of things really relating to the importance or the role of the UK in relation to to the outlook for Swedish, Finnish, or Latvian producers as three of the biggest suppliers into the UK. First of all, what would our panelists think of the forecast? As Nick more kindly said, our softwood forecast can be subject to some debate. But what would the panelists think of our forecast for a 4% increase in consumption in the UK for 2021? Is that roughly in line with your own thinking within your own countries?
Yeah, I don't think that is totally out of bounds, to be honest, comparing 2020 and 21. Mm-hmm. If they're not severe supply restrictions, but I think that, I mean, in Sweden it's so UK is the major export market and it will remain so, and I think also so that it's a market that you don't leave, because many of the companies in Sweden have also major investments in UK on distribution and so on, and I have no other number. I think it sounds reasonable.
Mm-hmm. Kevin?
Yeah, I would say that if anything, it might be on the low side. I think it might be limited by the supply rather than the demand. But just taking anecdotal evidence, just as we were warming up for this panel, Nick Bolton said he takes his dog out in the morning and every second house has a skip outside it. I think the RMI market in the UK, with so much disposable income for those people who have been lucky enough to save money through lockdown, I think the RMI market is going to be a massive factor, especially if we can't go on holiday until August.
Yes, I think that's
so 4% might look a bit weak. I don't know.
Yeah. And related to that, just to round up the questions here, I mean, given our audience is, of course, predominantly UK importers, distributors, we've seen that globally demand is going to be high. There are markets that Sweden, Finland, and Latvia can sell into, and that they will be absorbing more. Does the UK retain, and Olle's already kind of given an answer to this, but does the UK retain a huge importance then for the sawmillers of each of these countries? And would you say that is still a key market for you, Matti?
Yes, I showed you 10% of the Finnish exports end up in the UK, and it's among the top 4 export countries we supply. So it will remain as one of the key markets. Of course, the global situation sets a certain surroundings where the prices will go, where the volume will go, and also what Olle said, it will be more restricted from the supply side rather than the demand side. In Finland, the demand went up 8% last year for the domestic market. So it is, and Finland is up and running again. We had our problems with the strike last year. This year, the start of the year was better, so I think that we are able to supply also the UK market.
Okay. Any other comments on that, Kevin?
I would say the same, David. As far as Latvia is concerned, the UK is the default market. The UK has supported Latvia in developing its industry and vice versa. As Latvia has grown, I'm looking at our sales, as I mentioned earlier, 60-65% to the UK. That's not going to disappear, but the UK will have to pay the price.
Mm-hmm. Mm-hmm. Absolutely. Nick?
David, I'm not necessarily speaking on behalf of Germany, but I'm looking at the numbers, and certainly in terms of the volumes of sawn whitewood coming in from Germany, then I would say that from a German perspective, that the UK market is indeed a very important market for them.
Yeah. Yeah, no, I think we've been growing imports from a number of different areas over the past year as the demand has gone so crazy. So let's hope that continues. Gentlemen, thank you very much indeed. I'm going to leave it there. We have got questions around the concept of industrial wood production for wood construction, I should say. I'm going to leave those to pick up when we speak with Noble shortly about a housing forecast and looking at and the role of timber construction within that housing. So I'll pick that up then if I can. In the meantime, thank you all very much indeed. And please do stick with us. Thank you.
So much.
So moving on, we're going to move on now to look at the situation with UK and Ireland production and consumption of those products. And we're going to start now with, if I can just say, Keith Ainslie from James Jones and Sons and the chair of our National Softwood Division. Keith, over to you, please.
Good morning. I hope everybody can hear me. And I hope everybody can see the screens. Perhaps if somebody could confirm that's the case.
Yeah, we've got it.
Okay. So thank you for having me again. 2020, the year that nobody expected. As Olle had said, I presented at last year's conference as well. That was the last time I was in London. It was the last time I was on the train. I was heading to Cyprus to get married 2 days later, arrived in a locked down Cyprus, didn't get married, eventually managed to get married after 4 attempts. It was the year we discovered Zoom. It was the year we discovered Teams. It was the year we discovered lockdown haircuts. And it was the year that the favourite giveaway went from being a James Jones coffee mug to a James Jones face mask. Very unexpected. I thought it would be useful to just touch on what our experience was as British mills in 2020. And bearing in mind that at the start of 2020, Q1, most mills had throttled back production to some extent or curtailed it. And then when we hit lockdown, pretty much all mills reduced or even stopped completely production to some degree. So most mills, 23rd of March, hit lockdown, and then pretty much immediately started working out how to resume production. There was a major focus across the industry on pallet wood production. It may seem like a distant memory, but shortages of toilet paper and rice and basic commodities from distribution centres to supermarkets all needed to go on pallets. So there was a huge initial boom on pallet wood production with many carcassing mills cutting pallet wood. This rapidly moved on to garden products. And then as we hit the tail end of Q2, through construction timber and pretty much across all volumes. So the time I hit the middle of the year, most mills' production was down on what they would have expected quite significantly. However, I think we all worked very hard and collectively, and in the second half of the year, we pretty much made up all the production that was in deficit for the first half of the year. Traditionally, as you move into the winter as a British mill, you throttle back production to some extent. Didn't happen last year and didn't happen so that most mills had no winter stock build at all. That rolled into some of the issues that we've got earlier on this year. And I think by Q4, pretty much every British sawmill had implemented some form of allocation or volume management system. I think it's worth just touching on why we had to do that. Bear in mind, after a slow Q1, there was a bit of an initial disbelief that with a lockdown country, everybody wanted wood to some extent. So the price increases that we asked were pretty modest. And I think we collectively, we just wanted to take the orders after a slow start. And as a trade, we got in a bit of a hole. We probably committed beyond our capability, and it was inevitable then that we had to, as a trade, to have some form of managed volume allocation. It was the only way forward. As part of that, many mills reduced ranges. Peripheral sizes disappeared, the focus on 4x2, 6x2 and 8x2, really just to maximise and optimise the output. And also, worth mentioning that in 2020, sometimes there were some restrictions on what sawmill could produce, wanted to produce, because of difficulties in the co-product market. The chipboard mills were closed at times. You need to be able to sell the chips to continue sawing the timber. So that in itself caused some problems. So moving on to the numbers, as Nick has said, I am going for a slightly more optimistic number than Nick in terms of the 2020 output, and that is a figure of 3.6 million. So broadly static on 2019. Again, only time will tell. It's going to be September before Forest Research come out with the actual numbers. But talking around the trade, I'm pretty confident that we made up what we lost to every extent. And as far as 2021 goes, I'm predicting a figure of around about, or just over 3.8 million cubic metres for UK mills. That leads me on to the question that I've been asked most often in the last 12 months, which is, why can't you guys produce more? UK mills are close to or at capacity, productive capacity. Now you may question that. How can I say that, given that in 2014 and 2017 we produced 2.7 million cube? In both those years we had a higher opening stock. There is no latent capacity amongst UK sawmills. There are next to no unused shifts, and by that I mean there's no significant mills only working a single shift that could move on to a double shift. And there is no significant additional productive capacity planned. The cost barriers to new sawmills are now pretty huge. Investment has continued apace, and some of the presenters here today have made major investments, but that's investments in things like biomass, log yards, and treatment facilities. So these are focused on improving operational and financial efficiency rather than necessarily producing more wood per se. Touching on the sawlog price, the graph on the bottom right shows a sawlog price that was actually falling up to the last point that the Forestry Commission published the index. So reading back, our sawlog prices were rising to 2019. At that same point, that was when our selling prices were tanking to a low. And I would imagine that the next index on sawlog prices will show and reflect the really rapid rise in sawlog prices that mills have been experiencing for the last 6 months. Moving to selling prices. UK selling prices are determined by global issues and global supplies, not specifically by log costs. Looking at my chart here, we saw what I would describe as a sustainable increase in selling prices through 2015 to 2018. Then we had somewhat of an 18-month blip with prices dropping off. And it increases over the last 12 months. If you look at that as a trend from 2016 to 2021, it's a much smoother line. Yes, it's been difficult for some people to stomach the increases, but it is in part because of this rapid drop-off. Everything that the other speakers have said today suggests to me that there's going to be no let-up on these increases. There's a global imbalance between the likely demand and the available supply, so prices will continue to go up. as Olle touched on, this is different from 2007 and 2008. The supply situation is significantly different. And touching on the last comment from the last sort of panel discussion there, you know, a 4% increase in UK consumption, is that realistic? Absolutely, very realistic. I believe that will be constrained by supply. It could certainly be higher, but I'm not sure where the timber will come from to meet it. So 2021, we started the year with less stock, a narrower range, and a focus on output, and we all wanted a flying start. It wasn't quite the beast from the east, but we did get a period of sustained sub-zero temperatures, or spring as we call it in Scotland, and that negatively impacted the ability of mills to bring in logs. So we didn't get the flying start that we wanted. As I've already indicated, we would all like to produce more, but we're pretty much at the top level just now. And going forward, our output may be constrained again by the ability to sell co-products. Where I am today in Lockerbie, there's a power station next door, and they have a veritable chip mountain. It's the end of March, they should have no stock at all. Sales to biomass is a very important factor for the UK mills. That could constrain outputs. There's a major planned maintenance shutdown of one large consumer of wood chips too. So these are all factors that suggest supply is going to be constrained rather than growing from UK mills. The other factor is that to make up the volume at the tail end of last year, many mills sacrificed periods of maintenance and shutdown. You can't do that in the long term. If you sacrifice planned maintenance, you have uncontrolled breakdowns. So pretty much all mills have got that factor back in this year. And our policy of managing the volumes to manage the expectations will continue through this year. As I said, prices will rise. The other factor is the continued consolidation in the customer base, the private equity being a factor of businesses like MKM, National Timber Group, and Hughes Gray. These businesses are growing phenomenally. They're allowing an exit for many small and medium independents, and they're very much changing the shape of the market that we sell into, and I expect that to continue. And as I've touched on, we're seeing soaring log costs in the UK. In the last 6 months, at the extreme end, we've seen an 80% rise in saw log costs. So a bit of a lag from the selling prices. So beyond 2021, what do we expect? We keep hearing the phrase, we'll get back to normal. And my view is we might never get back to normal. I can't see us traveling up and down to London for face-to-face meetings every single month of the year. I'm sure we will have some face-to-faces, but I think the Teams and Zoom method of meeting is being proved to be effective and to be more cost-effective for businesses. Home working or blended working will be the norm for many. Dave touched on the National Softwood Division. The last meeting of the National Softwood Division, I think there was 20 presenters there, and 18 of the 20 were working for home, with many suggesting that they will continue to be doing that. Are the days of the traditional sales rep over forever? It's difficult to see a situation where a rep making 8, 9, 10 calls a day, 4 days a week, going across several counties is going to be a welcome guest into a branch network. So I would question whether that will ever return. And many of these changes, as I say, they've already been made. I'll touch on the carry stock later. The longer term shape of the UK forest industry. Over the last 10 years, 20 sawmills have closed. Now, most of these sawmills were small sawmills, less than 5,000 cubic metres, in the 1,000 to 5,000. And the overall productions remain fairly static. So overall, it hasn't had an effect. But if you are the buyer for one of those 1,000 cube sawmills, you've got a fairly big problem. We've seen the larger mills' share of the market grow to nearly 2/3. And we've seen the cost of new sawmill upgrades and developments rise to a prohibitive level. So with the exception probably of the three largest groups, I find it difficult to see any small or medium sawmill, family owned, actually replacing themselves or doing any significant upgrade. And this leads me to joins into my conclusion of an industry that's pretty much at its capacity. If you're a small sawmill producing 35,000 cube, you're looking at a new mill build cost of 15 to 20 million pounds. You're highly, highly unlikely to do that. Eventually, your mill will run out, you'll close. Longer term, there's plenty of logs, as my top right graph demonstrates. It's the same graph that I've used in previous years. The blue line represents what we are consuming as an industry just now. So the unused portion rolls forward. So the point where we run out of logs gets shoved further and further back. So there's no suggestion that UK sawmills are going to run out of logs or have availability problems. And we're not having just now. There are plenty of logs today, albeit we're having to pay for them. And finally, the last point I made last year was about security of supply and long-term relationships work. You know, value your supplier and make sure it's a proper relationship. I think there's been a lot of lip service in recent years to supplier partnerships. The relationships that work are those that are genuine ones of value to the customer and the supplier. And I think over the last 12 months, that has been proved more so than ever before. I'm very conscious that we're behind time, so I've kept that to an absolute minimum. So thank you very much for listening.
Thank you very much, Keith. And some excellent points there, particularly on the role of private equity. And I'm going to pick up, I think, with both you and Mike shortly about the impact of those changes, but also the impact through COVID of a lot of merchants and others moving to online sales, merchants and suppliers moving to online sales, and what that means for product availability, product ranges, and so on. But we'll come back to that shortly. In the meantime, I think there we go. If we could ask Mike Glennon, joint managing director of Glennon Brothers, to share your screen. There we go. Perfect. Thank you very much. And Mike, over to you to give an update from the Irish sawmill perspective. Thank you.
Greetings this afternoon from the Emerald Isle, and good afternoon, ladies and gentlemen. I'd like to thank you for the invitation to speak to you. Today, I would like to talk to you about the Irish forest. Is my screen working?
Yep. Oh, it's not moving. It's just on the title slide there.
Hold on, so. Okay.
There we go.
Okay. Today, I would like to talk to you about the Irish forest product sector, the impact of COVID-19, the felling license crisis, the impact of Brexit, the Irish economy, and finally, the new built homes market. Just to give you a brief update on Glennon Brothers since I last spoke to you, we were delighted to have won the TTJ Softwood Trader of the Year award for 2019 and then again in 2020. And we were thrilled to be awarded the Best Supplier Customer Experience at the 2019 Hardware Association of Ireland Awards. We have been continuously investing in our sawmill operations, particularly at our Windymen site. We have completed a 14 million installation of a state-of-the-art log sorter line, increasing our efficiency and throughput. Our 18 and 19 volumes were impacted by many challenges, including stockpiling in anticipation of hard Brexit and the impact of the bark beetle. 2020, as we've heard today, of course, is a completely different year for everyone. With 9 weeks of being reduced to single shift production, geographic markets moving at different paces, and coming to terms with the pandemic, disposable income increasing for some as a result of spending more time at home, meant the appetite for home improvement increased exponentially. The supply chain was soon bereft of stock, and has been a truly collaborative effort between sawmills and the supply chain over the last 12 months. As a result, we've delivered a successful result in 2020 with the volumes back up at the 2017 levels. There has been very little change in turnover between 18, 19 and 20. which highlights the many fluctuations in timber prices during this period. And you can see we have been continuously investing in the business. Now turning to the Irish forest product sector. Since 2018, Forest Industries Ireland has become the leading representative body for the sector, which has enabled the industry to speak with one unified voice. Thanks to our favourable climate and soil type, we can grow trees twice as fast as our Scandinavian competitors. Forestry in Ireland has an inherent competitive advantage. However, only 11% of our land is under forest cover, which is well below the European average of 38%. The Irish forestry and forest product sector supports 12,000 jobs and contributes 2.3 billion to the Irish economy. We now have an internationally competitive sawmilling and board manufacturing sector, and exports from the forest product sector in the Republic of Ireland are worth over 450 million. Quilcha owns 7% of the landmass of Ireland. Pre-felling licence crisis, nearly 80% of the roundwood supplied to the sawmills in the Republic of Ireland came from Quilcha. Exports of wood-based panel products amount to approximately 245 million, and 90% of panel products produced in Ireland are exported, with 2/3 going to the UK. Now focusing on the sawmilling sector, 5 large and 3 medium-sized companies represent more than 90% of the Irish sawmilling sector. The sector has invested more than 250 million to create a modern, efficient and customer-focused industry. The sector employs 2,500 people. Recent developments include the rebuilding of the GP Wood sawmill post the fire and the recent acquisition of Coolrain Sawmills by CJ Sheeran, the pallet and packaging manufacturer. In 2019, sawmills in the Republic of Ireland utilised 2 million cubic metres of roundwood to produce 1 million cubic metres of sawn timber, and domestic consumption was over 440,000 cubic metres. Exports to the UK from the Republic of Ireland represented approximately 9% of the overall UK imports of softwood, equating to just over 550,000 cubic metres when you include the north of Ireland. In our view, the combined output of the sawmilling industry in the Republic of Ireland and Northern Ireland, including round stakes, is 1.4 million cubic metres, of which 43% goes to construction, 23% to pallet and packaging, and 21% to square edge fencing. We estimate the sawn softwood market on the island of Ireland to be circa 1 million cubic metres, and our view is that homegrown timber has around close to 2/3 market share. Ireland's key market for sawn exports has always been the UK. Over 95% of all softwood exports from the Republic goes to the UK, valued at approximately 150 million. The single biggest challenge to the Irish sawmill sector as we stand here today is the catastrophic situation we find ourselves in regarding felling licenses. And whilst COVID-19 has changed the way we operate, both in the short and medium term, the fundamental crisis associated with the felling license process threatens the very existence of the sector, as well as many of its 12,000 jobs. Backlogs in the state's forestry licensing and appeal system have created silvicultural, supply and employment problems for processors, forest owners, contractors and forestry companies. Quilcha's volumes were down over 400,000 cubic metres in 2020, which is over 20%. This trend has continued into 2021. We have had no log auctions so far this year. Normally we would have had 4 by now. This is having a detrimental impact on the supply of raw material into Irish mills. It is driving up prices for private supply and supplementary logs coming in from the pest-free zone in Scotland. We are seeing the lowest level of afforestation in decades, with only 2,400 hectares planted, which is 56% down in 2017 and compares disastrously to the government's own target of 8,000 hectares. The current licensing backlog stands at 4,500 applications stuck in the system. 57,000 hectares of felling licenses were issued in 2019, compared to only 18,000 in 2020. This is a shortfall of 39,000 hectares. Sawmills are battling reduced production and are forced to import logs and sawn timber to meet customer commitments. Forestry companies struggling to survive are at a critical existential operating levels. The 2020 Forestry Act has helped with one aspect of the problem, but is far from solved it. Implementation of the 2019 McKinnon report on reforming forestry licensing is urgently needed. The report specifically highlights urgent needs to addressing weaknesses in project management and communications, without which very little progress will be made. Brexit. The sector's primary objective was to maintain a continuity of supply through the Brexit transition. A lack of urgency and shortfall in administrative capacity has led to some delays in obtaining phytosanitary certs for shipments of logs and sawn timber with bark. Additional costs have been felt as a result of customs clearance compliance and associated admin. Extended lead times to customers are a result of the more elongated process. Future-proofing of product marking conformity and changes in authoritative bodies is ongoing. In January, trading between Ireland and the UK fell sharply, with imports from GB into Ireland dropping by 65% and exports from Ireland to GB down 14% versus the previous January. Some of this can be attributed to pre-Brexit stockpiling and challenges with COVID-19, but it is far too early to assess the full likely impact of this yet. Now turning to the Irish economy. Notwithstanding the terrible effect that COVID-19 has had on many lives and the harsh realities as a further consequence of living with a global pandemic, the Irish economy, by comparison to many others, has remained relatively strong and robust. The economy itself grew by 3.4% in 2020, despite one of the toughest pandemic-related lockdowns in Europe, on the back of record growth in the export sector. GDP is forecast to increase by 3.1% in the current year and 4.3% in 2022. Unemployment inevitably rose in 2020 and was at 7.2% at the end of the year, compared to 4.7% in December 2019. The big concern currently being masked is that underlying unemployment, after taking into consideration the government's support, is estimated to be at 25%. Our view is that many of the small businesses currently being supported by government assistance may never reopen. Looking to the future, despite the significant challenges of COVID-19 and the full impact of Brexit still to be worked through, there are reasons to be optimistic about the Irish economy. The last number of months have again demonstrated the resilience of Ireland's export-driven growth model during challenging times. We look to be on course to be the only country in the EU which grew exports in 2020. It is mooted that a trajectory of Ireland post-lockdown recovery is on something of a K-shape. This occurs following a recession when different parts of the economy recover at different rates, times, or magnitudes. There are a number of key sectors in Ireland bounding forward, such as IT and pharmaceutical, whereas those hardest hit by the pandemic, such as hospitality and leisure, remain on the floor. This multi-track recovery is more pronounced in Ireland than many other countries due to its prevalence in the pharmaceutical and IT sectors, with Pfizer, Johnson & Johnson and GSK, as well as Google, Facebook and Intel, all having a large-scale presence in Ireland. Timber exports contribute in this regard, with roughly 56% of all Irish timber production exported and 95% of that going to the UK. From the pink line, you can see a large increase in household savings despite high unemployment, as spending opportunities were curtailed. there has certainly been a silver lining for the home improvement sector. Disposable income burning a hole in consumers' pockets has served to stimulate the wider construction products market since lockdown began. Despite the severity and length of lockdown, 2020 house completions reached 20,700, just 1.9% below 2019. Q4 ended the year strongly, up 16% year on year versus Q4 2019. Forecasted house starts for 2021 are set to drop to 16,000 as a result of the extended site closures. For every week that is lost on site, the knock-on effect will lower the annual output by over 400 units per week. Central Bank has estimated that up to 35,000 homes need to be built every year to 2030 to keep up with demand. But we still face significant challenges to achieving this goal. Ireland has faced the longest period of workplace lockdown in Europe. Furthermore, the European Construction Industry Federation confirmed that Ireland is the only country in Europe where construction has not opened since Christmas. From a Somling perspective, the type of homes being built will have an effect on demand. In Q4 2020, schemes made up 56% of all new dwelling completions, while 23% were apartments and 20% were single dwellings. This is the first quarter since the series began in 2011 that has seen more apartments than single dwellings completed. This is a worrying trend for the Somling sector, as apartments don't use as much timber as single dwellings. In conclusion, we have a robust and resilient processing sector which continues to thrive in the face of adversity. Most of our sawmills are family businesses with flat, customer-focused structures and are both positive and passionate about the future of our sector. We face huge uncertainty as a result of COVID-19 and the battle against the felling licence crisis in Ireland. But the Irish sawmilling sector has always been committed to the UK, and that will not change. We've overcome massive challenges before, and I'm confident that if we work together, we can do it again. On behalf of the Irish sawmilling sector, I would like to sincerely thank all our UK customers, especially those on the call today. Over 2,500 people depend on you for their livelihood, and on their behalf, I want to say a big thank you. I only wish I could enjoy a drink with you like we normally would do, but hopefully those times are not too far away. And thank you for listening.
Thank you very much, Mike. That was a fantastic presentation and very good insight into the situation in Ireland. I'm just going to pick up on a couple of questions. We are running about half an hour behind time, so I'm going to take a couple of very quick questions, and then, so long as everybody's bladder is holding up, we're going to move straight into Noble's presentation. However, just to start, Keith, you mentioned about the growing interest in or dominance by private equity groups within the merchant and distribution market. Does that in itself change anything in terms of the pattern of product orders? Are you seeing them, whilst you get the consolidation within those groups and those chains, is that also leading to a kind of a shortening of the range of products that people are buying, or any other changes in business practice?
It's different across the different groups. Some are continuing to buy much as they have. In other instances, you can see the influence of the financial people much more strongly, with increased pressure to turn over stock, to carry less stock, which in my personal view has an adverse impact on trading ability.
Yes. Yeah.
You need to have stock on the ground to sell it. If your driver is to minimise that stock on the ground, you're missing the opportunity.
I did wonder if that slightly exacerbates some of the problems that we've seen due to the
And that's why I'm
COVID
very
crisis.
careful, because different groups have handled it in different ways without wanting to name and embarrass. Some have gone the other way and have enthusiastically said, we need to have stock, you know, we're going to commit to that, and made a real success of it. And others, and to be fair, it's not just the PE businesses, others that have a higher degree of control by accountants, I think, have not fared as well as they could have.
Yeah.
You know, in the last 12 months.
Yeah, they don't want the risk of carrying the stock, but
Correct.
at the moment, if you haven't got the stock, you don't make the sales. I just wanted to ask you as well, you showed a picture there on the James Jones site of logging in to your account and so on. One of the things that a lot of members have talked about, and that we're going to be doing a lot more about within TTF, is about online sales. And some see this as a great asset to the company, a boom for their company. Others see it as a major threat and a big worry. And I just wondered, do you see this as a growing trend? Do you think that
Yeah, I mean, that screenshot was of our fencing app, Fence Master, that we launched this week. And that's an online tool available to our distributors, and it's picking up on let's call it the skills gap in the industry. I think we've all recognised that, you know, for many years, timber merchants increasingly becoming generalists. They don't have that depth and length of experience in timber, even to the extent that when turns up on a branch and says, I want to build a fence, the individual on the counter often has no idea where to go.
Yeah.
Moan about it. We've taken the view, well, let's provide a tool to people that says, here you go. You're very used to using a smartphone, tap away on your smartphone. That will help you design your fence. It'll come up with your bill of quantities, and it'll fire the email off to whoever your nearest distributor is. And I think there will have to be more of that. You know, that skills gap is not suddenly, you know, we can moan about it all we like. We're suddenly not going to have a generation of trainees across hundreds of branches. So it's incumbent on us to help provide some of the tools to do that.
Okay, excellent. Mike, just turning to you, a number of factors there at play in the Irish market there that you seem to have successfully navigated. So well done, and keeping going through there. You were also the first. I mean, this is the first of the Softwood conferences that we've done since the UK left the EU. The transition period's over, and we're doing that. Ireland is clearly one of the major flashpoints in post-Brexit trading. Do you see that we haven't really had all of the customs changes kick in yet in the UK? Do you see that is going to be more of a longer term threat as we come out of the COVID things, that's still going to be an area that you've got to negotiate and navigate to maximize your business?
I think, in fairness, you know, the speed to which the sector and indeed government departments had to react from a decision made at the end of the year, and then with effect from, you know, it was an unrealistic expectation for things to move freely and positively. I think most people saw that, and I think the drop in January of trade is probably as much influenced by pre-Brexit decisions, because people want to make sure they got stocked up beforehand. I mean, there are numbers, you know, when you bring in, no disrespect to any, but when you bring in government departments and customs and regulation, I mean, cost goes up, time rolls out, and that's just the nature of, you know, if there was when we were in the one trade agreement, that's the benefit of being in the one trading arena where there is no customs clearance and all this. So there has to be a downside of coming out of it. I mean, to date, we're happy enough how it's gone. I mean, and if we look at from our perspective, the north of Ireland is a very important market for us. So the Northern Ireland trade has been handled by the protocol, and that's, you know, working reasonably well. Our sales to the mainland is working reasonably well. Probably the area where I'm hearing most complaints about is trades from England over to the north of Ireland. And it doesn't impact us because we don't supply the north of Ireland from any of our Scottish facilities. We supply them all from our Cork or Longford facility. So I don't have it, but it's the one that is getting the most airplay. Now, some of that can be political and some of it can be factual. But I think the impact is far from being clear. I think we have a few more months to go on this before we see the full impact of it.
Okay. And Keith, just turning over to you, we've had a couple of questions pop up on the chat. Do you think that the customs rules, the ongoing issue there, notwithstanding the fact that we've got supply chain issues anyway, do you see it sort of strengthening the role of the UK sawmilling sector in the market, or
Absolutely. I think one of the comments I made last year was that, selfishly, from a UK sawmill perspective, Brexit was a good news story. So yeah, any supply difficulty into UK PLC on timber benefits the domestic mills. Having said that, I think the increase in demand is greater than our capacity, so we need these imports. You know, yeah, they need to be resolved. You know, my number of 3.8 million, it might be out by 100,000. We still need all the production from Mike and his Irish colleagues. We still need all the Swedish and the German. So these need, you know, any issues need to be ironed out.
Yeah. Okay. All right. Thank you both.
Excellent. I realise we're tight on time, so what I'll try and do is give you a key summary of how we see the UK economy, but then focus very much on construction and in particular activity on house building and repair and maintenance, and then just briefly highlight some of the key uncertainties that are around. Okay, from the UK economy perspective, if we have a look at UK GDP, we're in the process of what is effectively a W-shape economic recession and recovery. We clearly had the very sharp fall in GDP in the second quarter of last year. We then had the sharp recovery in GDP during the third quarter. What's occurred since then is that we've had a slight fall in GDP because we're in the third lockdown. January's GDP fell by 2.9%, and this shape of recession and recovery from the economy is broadly in line with what we'd anticipated in our W-shaped scenario for the UK economy. The 2.9% fall in GDP is less of a fall than we would have expected, though. We were anticipating there would be a 4% fall. So 2.9% is significantly different to that. And the primary driver, the primary reason for that is because of the immense spending on the test and trace system and the vaccine schemes, which clearly boosts the health sector, but the immense spending has been enough to increase GDP by 0.9 percentage points. So what it implies going forward is that we're likely to see a slight revision upwards in our GDP forecast for this year when we publish next month. One of the key highlights recently is that consumer confidence has been rising. And if you look at the overall index for consumer confidence from GfK in the UK, then consumer confidence is at its highest level since February 2020. So effectively since the initial lockdown occurred. It's not just overall consumer confidence, but what you see is that households are more confident about their own personal financial situation. They're more confident about the general economy, and they're more confident about making major purchases. So it's overall much more confidence in recent months. And that's important because households have accumulated £160 billion worth of savings over the past year, according to the Bank of England. So there's an awful lot of households who have maintained their employment and have accumulated savings. So the key to growth will be how willing they are to spend it. In terms of key changes since our winter scenarios were published, we've had the budget So the Chancellor got up and spoke at the start of March. He extended the coronavirus job retention scheme, which is furloughing, and the self-employment income support scheme, which are absolutely critical for the UK economy, because it means that we're not likely to see sharp increases in unemployment in the next 6 months. And what that means is that we're likely to see the private sector demand in the economy, and therefore in construction, is likely to be maintained. In addition to that, the Chancellor introduced a super deduction, which effectively means that there's a 130% first year capital allowance for plant and machinery investment. So we're likely to see business investment pick up strongly over the next 6 to 9 months as well. We're anticipating there will be strong consumer spending from the second quarter, which is likely to drive growth. And that's assuming the successful vaccination rollout continues and that we don't see any vaccine resistant variants emerging. We're reopening the economy over the next few months. Most of the economy will be reopened by mid-May. So we're expecting large increases in spending on non-essential retail and hospitality. But just be aware that travel and tourism may take longer to recover, as it'll be dependent on the COVID-19 situation in other countries. And the remaining restrictions are likely to fall away from the 21st of June. The markets are concerned about inflation in the general economy. Expectations are rising, but speaking to the Bank of England, they're focused very much on GDP recovery, and they're anticipating that inflation is likely to remain close to its 2% target over the next couple of years. So inflation is unlikely to be a major issue. In terms of what we're expecting going forward for the UK economy, I've put together our 3 main scenarios, and it depends how optimistic you are. But our main scenario has, from this low point of the first quarter of 2021, sharp recovery in the second quarter, and then slower rates of growth after that. If you're anticipating consumer spending recovers incredibly quickly, sustained by high employment rates, then you will go with the green dotted line. But what it effectively means is that we are likely to be recovering very quickly over the next 6 months. Now, our key interest is clearly on the construction side. And whilst it's been a W-shaped recession and recovery for the UK economy, it's more of a V-shaped recovery for construction, which you'll be well aware of. And January's construction output was 0.9% higher than in December. We obviously had the sharp fall in the second quarter of last year, but we're looking at a period where construction output overall is, in January, it was 3% lower than a year earlier, which is pre-COVID. It's a V-shaped recovery, but it depends which construction sector you're operating in. And if you look at the different sectors, I've put together a chart of the key construction sectors, index them all to January 2020, so before the COVID-19 became a major issue in the UK. And then you can see the monthly evolution of the key sectors. What's noticeable is one of the sectors that you won't be so interested in, infrastructure, was the least affected of the construction sectors, because you've got large sites, fewer different groups of trades mixing together, and you've got an easier way of implementing site operating procedures and other social distancing measures. Plus, you've got clients like government and regulated sectors that have long-term projects and pipelines of frameworks that they're keen to get on with. So activity wasn't affected as much in infrastructure, and it got back to pre-COVID levels of activity over in November. You look at the opposite side of the industry, and private house building was the worst affected, where we lost over 60% of output in April last year, but activities recovered relatively quickly. As soon as house builders were aware it was safe to get back on site, they were keen to get back on site and crack on with sites started pre-COVID. And then once they saw that house price inflation was substantial, then they're happy to build out. So activities recovered relatively quickly in private housing. Private housing repair, maintenance and improvement is shown by the orange line. And what's noticeable here is that in April last year, we lost over 40% of activity. So we effectively lost all of the improvement side of that sector. But what we ended up with is pent-up demand. And we ended up with an awful lot of people who are working from home and with non-essential retail closed for substantial parts of the past year. You have an awful lot of people at home that have sustained their jobs, fewer expenses in terms of commuting, hospitality, and found it was worth investing in the home. So doing DIY and also improvements works. And by October of last year, activity in private housing RM&I was over 20% higher than pre-COVID. Activity has slowed since then, but it's still at a level which is substantially higher than in January 2020. If we look at the more recent data, which covers February from IHS Markit SIPS, they have a quick survey across 3 construction sectors, and anything above the 50 line shows monthly growth. Anything below 50 shows a monthly fall in activity. And what's noticeable is that since we had the recovery in activity, which occurred summer last year, the main driver of growth quite clearly has been in housing. And activity in February continued to increase, whereas commercial had a marginal increase and civils activity, which won't be of interest to you, civils activity fell in February. It's worth highlighting contractors' views on recent activity. And since February, what we've seen, speaking to contractors, as I have been doing, is that housing demand continues to be very strong, particularly after the government extended the current Help to Buy. After it extended the stamp duty holiday, and it's now introduced Help to Buy mortgage guarantees to help mortgages that are 90% loan to value ratio and 95% LTV as well, which had been an area in which mortgage availability had fallen sharply since COVID. There's the direct impact of these policies in terms of enabling more demand, but there's also the signaling impact to not just the housing sector, but the public at large, that government is willing to underpin housing as a sector and house building. On private housing repair, maintenance and improvements, the contractors I've spoken to have indicated that activity slowed slightly in January and early February, which is potentially due to the poor weather. But the indications are that activity's risen sharply in March, and that's particularly for outdoor activity, so decking, fencing, etc., and also construction related to expanding home office areas. So it could be converting a garage, or it could be doing an extension. Public housing repair, maintenance and improvement is very strong currently, and that's primarily due to cladding remediation. So firms involved in cladding remediation have an awful lot of work. However, if you're doing standard public housing repair and maintenance, just general repairs and maintenance on the public housing stock of homes, then your activity is relatively subdued. So it not only matters which sector you're in, but which niche of the sector you're in. Infrastructure demand remains very strong if you're on the major projects, but there are concerns about some of the small, medium-sized projects that are getting stuck in a slow procurement process. There's just a bit of hesitancy to sign things off, particularly from public sector. And then on commercial activity, we're looking at continuing large projects that were started in 2020. Activity on small projects in local communities continues, primarily due to the increased working from home, but the pipeline for small projects, which is £10 million or less in commercial, within urban centres has fallen away sharply. It's worth just highlighting housing starts, completions and output. If you look at the blue-grey line and the green-grey line, that starts in blue and completions in green, you notice that looking at the end of last year, 2020 Q4, starts and completions were both back above pre-COVID levels. However, housing output, which is in red, isn't back above pre-COVID levels. Now, that's not a measurement error. It illustrates an important point within housing currently, which is that there's strong housing demand for houses. However, demand for flats has fallen, and that's because starts and completions measures new build construction, whereas housing output also includes conversions, which is turning a house into multiple flats, and changes in use, which is converting offices into flats. And one noticeable factor about the past year is that the demand for houses, particularly outside urban centres, has risen considerably, whereas the demand for flats, particularly within London, has fallen away. If we look at our main scenario for 2021, we have 14% construction growth, and that's for total construction. And it's worth noting that the key areas of growth are infrastructure, 32%, and public housing, RM&I, which is based around that cladding remediation, which is 21%. But we do still have significant growth on the housing side and housing RM&I side, which are key areas for you. It's worth noting the 14% growth for total construction this year sounds very high and it sounds great. However, that's because we had a bad hit to activity in the first half of last year and activities recovered relatively quickly since. So most of that growth has already been built in. And if activity within construction just continues at January levels, so even if we don't get any growth beyond January's activity, then overall this year, construction output in 2021 will still be 9% higher than it was last year. And it's worth noting, given what was said earlier about 4% growth in sales this year, if private housing RM&I activity just remains at January's levels for the rest of this year, then overall private housing RM&I will be 8% higher than it was last year because of the hit in the first half of last year and then the recovery during the second half of the year that's left activity at a relatively high level. Just a few of the key uncertainties. Firstly, two-speed housing market. There's very high demand for houses, but not such a high demand for flats. There's a high demand for housing in suburban areas and rural areas, but within urban centres, housing demand is falling. How sustainable is it to have a two-speed housing market continue? Secondly, RMI and DIY are doing very well because people have been at home accumulating spending without other avenues for that spending. Well, what happens when people get back to normal forms of spending? In the second quarter of this year, when the weather gets better, the economy reopens, are we going to see a mad rush to hospitality, to travel and tourism, cafes, bars, restaurants, at the expense of doing RMI and DIY work? It's worth highlighting government policy, which is that infrastructure is driving a lot of the growth. Public housing RMI is driving a lot of the growth, which is funded by cladding remediation works. You've also got house building and consequently the RMI market, which is stimulated by the government's enabling more demand in the general housing market. What happens if government doesn't keep sustaining activity? It's worth noting commercial space demand. Well, we will be getting back to offices at some stage, but we're not likely to be getting back to the offices 5 days a week, not all of us, in which case there's a decline in demand for commercial office space and all the associated retail and leisure that goes along with commuters. That puts at risk the extent of commercial offices demand and future commercial offices investment. The main risk for us is the rising costs. Insurance costs for contractors have been rising. We've had delayed projects which are taking more time and costing more, particularly on bigger projects, and then imported product prices. It's been mentioned earlier about timber product prices increasing, but also copper, steel, paints and varnishes have also increased in cost. So the key issue there is what's going to be the impact on the main contractors and the supply chain. And associated with that, the imported product supply issues. It's not just the costs that some contractors are concerned about, but also can they actually get the goods? And as I highlighted, it's not just timber, it's paints and resins, some roofing products, steel products, copper, and white goods as well. One final issue on the uncertainties, which is it's just worth noting, outside of housing, new build, RMI, cladding remediation and infrastructure, if you're feeding into sectors like commercial, industrial, etc., commercial new orders, or sorry, construction new orders in Q4 last year are 13% lower than they were in 2019. So either the Office for National Statistics has a measurement issue, or we may see a slight hiatus in output towards the end of this year or early next year before the orders pick up again. Final point about Brexit, because it's been picked up on earlier, but just in terms of short-term issues, what we've heard from contractors, product manufacturers and merchants is that the main issues have been from Great Britain to Northern Ireland, because you need to be able to prove that materials and products are going to be used in Northern Ireland and not taken to the Republic. EU to Great Britain, the major manufacturers experienced a few issues in January and early February, but they're largely sorted out. And that's for major manufacturers, but SMEs are continuing to have problems. Medium-term issues are probably not as big for your members as they are for some of the Construction Product Association members, which is UK CA marking that needs to be done from a UK testing house, which is going to come in from 1st of January, and then REACH, which affects chemicals and could have a big impact on product supply and cost, again, from the 1st of next year. Just as a summary then, Okay, construction is considerably better off than most sectors in the UK, particularly person-to-person interaction services like cafes, bars, restaurants, hospitality, travel and tourism, which have been incredibly badly affected and will take a long time to recover. Construction is far better off than those sectors. Currently, construction activity in Great Britain is relatively buoyant, particularly in housing, RM&I, and infrastructure. Northern Ireland is slightly different, where they have different issues about lockdowns. The key growth sectors are expected to be infrastructure, public housing, RM&I, warehouses, and private housing. But there remains some unprecedented risks. Rising costs and supply issues, reliance on government for industry growth, the long-term prospects for cities, and then the full impacts of Brexit medium term. So I'll stop there, David, but if there is time, I'm happy to answer any questions. And if there isn't time, then you'll have my slides and my email address is there, and my Twitter handle has the latest economic and construction data on there.
Thank you very much, Noble. That's a fantastic overview there. I think that there are a couple of questions I'm just going to pick up on very quickly. That are particularly pertinent to this audience. So you saw earlier with the opening presentation from Olle Berg about supply and demand issues and you know, the incredible price inflation that we're seeing in the UK. TTF has been trying to communicate that to the market and particularly to the major house builders and the points before we get to the major house builders, notably the timber frame sector, which is suffers as a result of you know, not being able to accurately price a job more than a week in advance, which is not the way the market works. Do you have any insight into how other sectors are communicating these issues, or is it just as much of a problem for them as it is for us?
It's just as much of a problem, and contractors generally are not the best at dealing with issues until it actually hits them square in the face. And they're also not the best at listening to the explanations for why these are occurring. We encountered this issue early in 2017 after the depreciations in sterling following the EU referendum, when we had 20 to 30% price increases, and trying to explain that to small, medium-sized contractors who were just going down to the local builders merchants was an absolute nightmare. They were convinced that despite showing them the impacts of the exchange rate, that we as industry, product manufacturers, importers, and merchants were ripping them off. This is even more complex because it's not just 20 to 30% cost increases. Looking at some products, like copper and steel, you're looking at 30 to 50% increases in cost, and with timber, it's even greater than that. And so, trying to explain this to firms that are not ready for it, they weren't prepared for it, and they're not the best at understanding the explanations that, firstly, timber, copper, steel, you're looking at globally traded products, you're looking at globally demanded products, you're looking at areas where it's not just dependent upon your one little SME contractor and their demand, it's not even UK construction demand, which has rocketed up since spring last year, trying to get them to understand that demand has rocketed up in housing within China, within the US, within Australia, lots of key countries. It's all happening at the same time is not easy. And you're facing the same issues as lots of other areas like copper, steel, paints and varnishes, and so on. And to a certain extent, you're doubly hit because it's not just going into new house building, it's going into new house building, RM&I, and to a certain extent DIY as well. And DIY and RM&I are the ones where activity has accelerated the greatest, but all three of your main sectors are areas in which it's just accelerated at a local level, domestic UK level, and globally. And it must be incredibly difficult explaining it to them because SMEs are not the greatest at listening.
No, and I do think that there's a communications exercise in trying to persuade the construction industry to reform its purchasing habits, just to have a longer term outlook. We've been discussing this a lot about the communications that are needed throughout the supply chain, and I think that's all we can do for the time being.
I think there is a slight problem, and I know time is tight, but there is a big problem that often the contractors that may be aware of such issues and can afford to think longer term are the large house builders or the large contractors, but they're not the ones that purchase a lot of the materials.
Yes.
It's subcontracted all the way down to the supply chain to a very small SME that turns up at the builder's merchants when they have a problem and then is surprised that the material or product costs an awful lot more than it did a month ago when they needed it.
Yes.
And the communication needs to be better, not just to the largest contractors, but throughout the whole supply chain.
Yes, absolutely. Absolutely. We have got a number of other questions from issues that were raised in your presentation, particularly around UK CA marking and CE marking.
Yeah.
I'm not going to take them now. We are, the TTF is working with Duncan and Peter at the Construction Products Association. We are also working with our European counterparts in the European Sawmills Association and Construction Products Europe to get a sort of a consolidated answer or view towards lobbying on this particular issue. But it is likely to cause a problem. There is a communication that went out yesterday from TTF and a presentation on our website that you can, all of our members can access and find out the situation. The long and the short of it is, at the moment, we are asking all of our members to be talking to their suppliers, talk to the sawmills, talk to the producers, and find out what they are doing. Make sure that they are aware of the changes to UK CA marking, and find out what they are doing and how prepared they are at present. As we've run over time and we are about a quarter of an hour over, I'm going to leave the questions at that. We do have other questions which have come up. One in particular, I'll just take this, and I don't know if Matti Mikkola may be on the line still to be able to give an answer. One question that's come in about the low carbon economy. By so heavily promoting the use of timber as a solution to reducing carbon, are we sure that we're not overly reducing the world's forests in this pursuit? And I think here we've talked a lot about timber construction and the growth of timber markets. I think that there is certainly sufficient volume of timber. I think that there are kinks in the market about producing that. But for me, this is a question of the low carbon theme adding more value to the to wood and to timber rather than using up more volume, and putting in that value within our proposition to the market, which is then equal to the price inflation which we're seeing across all of the products that we sell. So that would be the area in which I'd answer. I don't know if anyone else has a view on that, but please do email them in.